guys, thank you for joining me today. If you're new to my channel, I'm Kay. On today's video, we'll be looking at a couple in Manchester, UK, I think it's Staffordshire, UK, that has paid off their mortgage in a bit over 7 years. So under 8 years, they were able to clear their mortgage. So the story, and I'll put the article bit here. So the story goes, so the couple were in their 30s. They're now 36 and 38. They're about 36 and 38. They had a goal that they would pay off. So the lady is 36 and the man is 38. And they wanted, by the time the lady was 40, or before she turned 40, they wanted to pay off their mortgage. And they were able to do that. So how they did it was, in 2010 they got married. By 2011 they bought a property, but they had saved for several years. I think it was about 6 years they had saved to raise the deposit to buy a house. So in 2011, when they bought their house, they paid £112,500 for their house, and they said that on their street the going price was about 150,000. So they got it at a good value. And they also mentioned that they qualified for a loan of 190,000, but they didn't want to stretch themselves. So they settled on something lower. Mortgage product that they took out, or they eventually got, was a 35-year mortgage, and that was because they couldn't get a 25-year mortgage package. They put a down payment of £16,880 down, which is 15% deposit, and because they paid down 15%, they were able to secure a good interest rate. And with that, they then moved on to start making extra payment. Their monthly payment was about £394. They started making additional payments of £160. They also mentioned in the article that they made sure they got on a mortgage deal that allowed them to make endless overpayments. Correction, it might not be endless the word they use, but you know, there was no restriction on overpayment. They were able to make as much overpayment as they could afford, and that was £190 every month in addition to what they were paying. And so by 2018 they had about £20,000. So from 2011 to 2018 their balance was about £20,000 remaining. And by March of 2019 they were able to pay it off. Strategy that they've used: first, they actually made sure they had a healthy deposit, because your deposit determines how much interest rate you would pay. If you have a higher deposit, it means the loan to value ratio, in terms of the loan that they're giving you with respect to the value of the property, that ratio, if that is low, you get a better interest rates. And so I've seen where one of the good, if you can get a 60% loan to value ratio, the interest rate is so good, is really good. I'll try to pop it here if I can find exactly what some of those banks are doing and do a comparison. So so that was one of the things they did. They secure they made sure they had a healthy deposit, which allowed them to have a really good interest rate, and which meant that a lot of their much of their payments could go to the principal quicker, sooner than just to interest. And then the second thing that they did was they bought, not at the max that they were given, or that not at the maximum mortgage that they could that was available to them, but they kind of went a bit lower so as not to stretch themselves. They also bought a property where on their street, it wasn't at the on their street the properties were going at 150, but they got a property below the average street value. Again, they're kind of securing some equity just by buying below the street value of the property there. Also, they mention that over the years they did some DIY and they improved their property such that it was valued at around 190K. And by the time when it was valued at 190K, they went back to their bank to get a recalculation, which was a very smart move, because they were able to get the bank to put them on a better interest rate, a more favorable interest rate for them, because when they did the recalculation, their loan to value was that they were able to get a mortgage for was 60%. So that was really good. So you're moving from like having to put a 15% deposit, and then now you have a 60% loan to value ratio, which offered them a better interest rate. So one of the other things they said was that they didn't live lavishly. The husband drove his 12-year-old car still, and it kept going. It was able to. But also, when they had dinner, if they wanted to entertain friends, they'd have them over and cook, and they were able to still enjoy themselves. And they also had opportunities to take holidays. So they also mentioned that they weren't too stingy. They made sure that they had a bit of fun in it. So that's also another thing that helps you get further on your journey if you want to get rid of some debt, or you want to pay off your mortgage quickly, is that any long-term financial goal that you are trying to pursue and it requires some sacrifice, you also need to balance it by giving yourself, well, as you take the sacrifice, you want to also give yourself some rewards along the way to allow you to become more, motivated and continue on the journey, because it sometimes can get hard on the journey where you're trying, and I'm talking from experience, where you're trying to save and you have to say no to certain things, and you have your friends doing other things, but you have to bear in mind what is the reason why you're doing it and what's your end goal. If you stay focused and know that, and then also reward yourself with every milestone that you reach, then you will be able to continue on that journey. And as you begin to pay off the debt or get closer towards reaching that financial goal, you may see that the momentum there, your drive increases. So yes, so I like that one where they still try to have some element of fun in it, and that kept them because not everybody can go cold turkey. Like when you need to, okay, start a budget, that's it. We're gonna stick to it and that's it. Not everybody can do it. There's only certain people that can do it. And so if that's not you, then try to incorporate ways in which you can have that balance so that you could keep going. They also watched a lot of money programs, and that help them understand more so that they make wise or decisions along the way as to how to um, how to reach their goal, which was financial freedom before um, the wife was 40. And so they were able to do it, and they are enjoying being mortgage free, as the article outlines. So hopefully I could get them on one of this mortgage freedom spotlight videos. But in the meantime, if you are looking for inspiration on how to be mortgage free and do it quickly, have a read of their the article in the link below. Continue to tune in for some more tips or spotlight moments where we'll be talking about people who have done it, and you know what, if others can do it, we can do it. So thank you all for watching. If you haven't subscribed, please subscribe, hit the notification button, put some comments down below, share your thoughts. If you're on this journey already of you're gonna be mortgage free and you'd like to share your story on this channel, please contact me and we can discuss it. And if you just want to give words of wisdom, encouragement, then that's what we're all about here. So thank you again for joining, and see you on the next one.